Are we recording?
Yeah, we're recording.
All right. So, welcome back to Three Men at a Table, where mortgage, real estate, business, and real world all meet at the same table, or in our case, in the same Zoom room. So, we're talking about what's happening in the industry, the market, the world around us, and we're not afraid to have an opinion. So, today we're breaking down what's really happening in mortgage, real estate, what we're seeing, what buyers and real estate agents need to know, and things nobody's going to talk about. So, thanks for joining us. We'll kick it off with a little bit of like the week, man. This week has actually been a little interesting here. I'm going to move something out of my way so that I can actually see your faces. But what have you guys? How's your week? How's your week, Sean?
Well,
I
well,
mean, the week's been good. Business is picking up, so
Yeah.
I feel like we're definitely seeing a lot more mortgage applications come in, and that's a good
hmm
thing.
Yeah. Yeah. Pick up with it. What about you, Lex?
we got some exciting news that we tell them
Yeah.
about.
Yeah, tell them. Yeah,
Oh,
We're gonna
yeah,
be
yeah,
we're gonna be moving into an office
yeah,
September
yeah. There we
1st,
go.
and we'll be doing our podcast live there. It's
yeah.
gonna be sweet. We got a whole setup and everything. We just got the podcast materials ordered, and we got a nice little office in Irving, so it's gonna be sweet. Excited about that.
Ooh.
Gonna have
I'm
some
invited to
music.
it.
Gonna be able to like cut Sean off
They're gonna have a dump button for
when
me.
he's talking too much.
Yeah. Am
But
I
it's not for
invited to
cuss words.
this?
It's for just shutting me up.
What?
I said you're gonna have a dump button for me, but
Yeah.
it's not for cuss words. It's just for shutting me up, just turning
That's
my mic off. It's just gonna.
Yeah.
exciting though.
What have you guys seen with that's exciting though. That's just September 1st, right?
Yes, sir.
Yeah.
Yep, September 1st. It's our moving
Man,
day.
we're gonna have to have like a I don't know, like a christening party or something like that, right? Don't you like
Yeah.
when a sailboat like is going out to sea for the first time, you like smash some champagne bottles against it?
Like a cut the
Apple
ribbon type
juice.
of vibes.
Huh?
Cut the ribbon type of vibes.
Yeah, right?
You understand?
Yeah,
Well,
let's do that.
we'll do sparkling grape juice, right, guys?
Yeah, that's right. We'll
Just
definitely do
Well, yeah, I mean, we're
we
not gonna run and drink
got
it.
a couple guys that are sober here. We gotta be respectful. Gotta keep it
it.
respectful.
Yeah. I don't need to be smelling alcohol, you know. I'll
Can't
go
go back to
crazy.
the old days.
What's that Marinelli's? We get the apple juice. That's my favorite.
Yeah.
I'll roll with that.
So let's kind of talk about it. I think this week we're gonna really just dive into a lot of questions that come up pertaining to the market. We see a lot of stuff with interest rates. We see a lot of stuff with home prices, and I think this week's episode would be really, really important for us to just kind of touch on it from the professional side of things. So, um, kind of talk about like the elephant in the room, which is interest rates, right? It's really hard. It's really hard to pinpoint like when interest rates are going to drop. We get asked all the time, what's our current, what do we think? I mean, we're in like the mid, what, Sean? We're in the mid sixes right now, like give or
Correct.
take,
Yeah.
depending on the scenario. Um, when are we gonna get in the fives? When are we gonna get in the fours? Is that ever gonna happen? Are we gonna see the threes again? Um,
Yeah, it's kind of one of those things where you keep hearing that it's coming, but then every time I feel like we're going or headed in that direction, then there's some kind of economic shift that pushes us back the opposite way, right?
yeah. Well, so here, let's talk about what's happened over the last couple of months, right? So the biggest driver that's really pushed up, um, the biggest driver that really controls mortgage interest rates, believe it or not, for those that are listening, is not what the Fed does. The Fed has a little bit of influence in it, but really what's really driving interest rates is investor sentiment. right? Like that's the biggest thing is how comfortable do they feel that the economics of the country are doing well. And when we have things that are like wars and inflation, inflation has been the biggest one. That's been the biggest, kind of like monkey on everybody's back when it comes to rates over the last couple of years is is how do we combat that? And so the Fed is going to try to combat it, right? They're going to raise or lower the prime rate. Basically, what they're trying to do is they're trying to stop circulation of cash. This is what I tell clients. I don't know if you've got a better way to explain it, Sean, but like if we have a lot of cash flow circulating in the market, right? We've got like 2021 when rates dropped, right? The cost of borrowing money from a consumer standpoint is next to nothing. Like specifically mortgage rates were 2 and 3%, but we had credit card APYs that were really low. We had people that are getting personal loans and I mean we had SBA loans that were, I mean, I think some people are still, being sued for a lot of the fraud stuff there. But we had SBA loans, we had like personal loans, we had installment loans for cars. All of those rates were really low. So we had a lot of people that had, requested loans and things like that that were getting a lot of approvals, and then it was pushing more cash, injecting more cash in the industry. And so the way that I explain it to people about how the Fed directly affects mortgage interest rates or just interest rates is the higher the prime rate, ideally, it's the cost of borrowing anything goes up. And so people are going to be less likely to want to go get that new car, to get that personal loan, to open those credit cards, and thus, curtails the amount of cash flow flowing in the market, shrinking it. And so then everything else, specifically inflation, comes down. Because if we've got too much cash flow in economics, I mean, that's going to just companies take advantage of that, I guess is the best way to say it, right? Like, you know, I don't want to name any names or anything like that, but we definitely see really hard effects of inflation when when there's too much cash flow, because companies go like, they're gonna pay for it, like things like eggs and milk went up. That's a direct byproduct of high inflation, and it's I mean a lot of what my opinion is greed too, to a certain extent. Like
Yeah.
Right.
like if everybody has all this money and they're willing to spend it, why not jack up the prices on stuff? Because they're gonna buy it, and
Right.
it kind of like fuels the rest of the stuff. But I mean, Sean, what would you say? Like, what is the best way that you would explain it?
Well, I'll tell you the truth. My first wife took economics for me, so I don't know if I should be explaining it to anyone. It's probably not my strong suit. I would I would ask you this though, with rate in mind, do you feel like mortgage interest rates are just the thing that are at the top of at the top of people's minds when it comes to rate talk? Because I feel like nobody ever cares what their car interest rate is. Nobody cares what their credit card interest rate is, but everybody cares about what their mortgage interest rate is. They want to talk about it at the barbecue. They want to brag about it. It's the first question out of everybody's mouth when they take an application. So do you feel like there's just way too much attention to that mortgage, rate talk,
Yeah.
specific?
Well, I wouldn't say there's too much attention to it. There tends to be more attention to it because real estate in itself is like one of the foundational pieces to our economics, right? Like real estate in itself is we saw 2008, the big crash, when real estate in really a lot of the banking industry went under, that wrecked the economy everywhere else. It had not just ripple effects, but it had like tsunami-sized waves. Businesses shut down. People lost their houses, their jobs, their livelihood. all on the basis of real estate. So I think when it comes to interest rates, yeah, there's a lot of emphasis on what are interest rates doing because, I mean, here's the thing that we tell people all the time is high interest rates suck. Like nobody wants a 6 or 7% interest rate, but as we look at over the last like 80 years, there's a beautiful graph that this institute. I don't know if they're an institute, but they do a lot of like research. Core Logic over in Jacksonville, Florida. This came out maybe 2 years ago, but they had done a study over the last 80 years of home appreciation and depreciation values, and from like the last 80 years, it was maybe 7 or 8 times that home values depreciated or appreciated. I was no, 7 or 8 times that they depreciated from one year to the next. But then you also saw like interest rates were all over the place. Like in the early 2000s, 8%. In the 80s, 14%. And there could be an argument to be made like wage growth has not really kept up with the cost of living and all those other things. But I think the illustrative purpose with it is that interest rates are not always going to be, where they're currently at. So, when we're talking to people and they're really like fixated on the interest rate, it's like, but nobody else, like, think about the mentality that you have. You're questioning whether you want to buy, right? Because interest rates are too high, but so is everybody else.
Yeah.
So if you think about it, and this isn't like a date the rate, marry the house kind of thing, like that, that bit everybody in the butt really, really hard. But if you think about it, people are always going to buy and sell real estate, whether it's at a high level or a low level. There's always going to be people in the marketplace that want to buy and acquire, and there's always going to be people that need to sell, right? That's just kind of life. Um, in a market that we're in right now where rates are elevated, you can find better deals. You can negotiate a little bit better. I think what was it like 38 or 39,000 homes were listed for sale or on the market in July in Dallas Fort Worth alone. Like that's an astronomical number. This is what I found though. This is what Brock had sent out for one of his morning briefs or whatever. So here's what's happening with mortgage rates right now. The government tried to give the bond market some relief by buying back more long-term Treasury debt. Rates initially improved, but that didn't last long. Why? Because it doesn't fix the bigger issue. And this is kind of what I was talking about with investor sentiment. The government is still running large deficits and borrowing a massive amount of money. That additional treasury supply can keep upward pressure on long-term rates, which is what we want to look at. And at the same time, the economy is still holding up. So we're not seeing strong, recession signals. We're seeing though we're seeing oil prices rise, which is creating additional inflation. So inflation has gone back up. Um, Housing's a little slower. I think I saw like it was like 1.7%, like 3 to 4 months worth of inventory. And it's creating opportunity. But the big one that a lot of opportunity that a lot of people are seeing is builders. Builders are offering tons of incentives
Yeah.
um, because they have warehouse lines. Like where I'm at in Justin, you guys have been to the house. I don't think Alex has, but Sean, you
Okay.
have. It's like we're phase three of phase five in this new development, and we've got like William Ryan, we've got Highland, Beazer, we have Toll Brothers. I mean, it's like a huge like they all just kind of chipped in and in each one of them bought a portion of the developed land. But I've seen some of the smaller builders cycle out. Like Beazer, when we moved in a couple of years ago, Beazer wasn't in here. Now Beazer's in here. D.R. Horton wasn't in here. Now D.R. Horton's building homes. So you have builders that are sitting on a ton of land, and there's not a lot of demand, but they're leveraged with warehouse lines and their own capital to build homes, and so they're offering like crazy amount of incentives. What was it? D.R. Horton was like for the longest time, it was like I think they're up now, but they were offering 3.99.
Yeah, it's insane. I mean, how
It
much
was it
better
was
they can
yeah.
get on pricing than what we can do, in the regular market.
Yeah. Dude, it was 3.99 and they were also paying for the 2-to-1 buy down. So the first year the person was going to be at 1.99%.
Yeah, that's insane.
It's insane, dude.
I mean, do you remember the last time? Because everybody talks about this, you know, everybody talks about when the rates are finally going to get better, get into that 5% area and stay there. Do you remember the last time we were at 5%?
Mhm.
You you remember what year it was?
What year it was? I mean, outside of like the ramp up that we recently had,
Yeah, I mean, because it dipped
2018.
earlier. It dipped earlier
Yeah,
Yeah.
this
right
Well,
year.
before the bank crisis.
2018, 2019, we were in
Wait,
the I remember doing like TSAC loans at like 5.5%, and people were like, man, this is high.
wasn't
Yeah,
like 5%,
people
like
complained at 5.5%, but yeah, the last time we were in the fives was 2022 was the last time we averaged in the fives.
Yeah.
That's
But
four
that
years
was so
ago.
brief though. Like that's what I was saying. Like when we ramped up, yeah, we passed through the fives, but
Oh yeah, because
it
what
was short-lived.
18 is when we saw like the 4%, and then when we
right.
had COVID, that's when we
Yeah.
got down into like threes, twos. I think the lowest rate I ever gave someone was a 1.25% interest rate on a VA loan.
Dude.
Right? Like it was crazy.
Dude, I remember I got this one guy. He wanted to do a refinance on his investment property over in Plano, and I ended up locking him in at like 2.75% or something like that. And for those that don't know that are listening, I think we got like 9 subscribers on YouTube, so I'm pretty happy about that. Of the 9 people that subscribe and listen to this, and don't know, uh, investment properties typically carry higher interest rates than primary residence. And when I saw 2.75% on an investment property, I was like, "Holy cow! Like this is
Yeah.
insane."
Well, and at that time, I was, during 2020, I was working for a portfolio lender. You couldn't, like, you would literally hang up the phone, and somebody would already be on the line, and they'd
Yeah,
be like, "Hello, hello." I've been waiting for like 2.5 hours.
yeah.
Like
Trying to get this done.
that's how busy we were. You could literally just take call after call after call, and the smart ones did. The smartest ones, that's all they did was just take a call, hang up, take a call, hang up, take a call, hang up, and they would just build like 10 loans, and then at the end of the day, they just worked them up.
Yeah.
It's crazy.
Do you think this market's becoming a buyer's market?
Yeah, I mean it has been. Gosh, it has been. I feel like it has been almost all year.
Yeah.
Um, which is nice, because it makes our job easier, I feel like, when it comes to, working alongside, realtors, good real estate partners to get people into homes. Because you can have people come and say, "Hey, I've got good credit. I've got a good job, but I don't have a lot of income assets saved up." It
Yeah.
allows us the ability to say, yeah, that's okay. We can work with your realtor and get you into something, right? And we just tell the realtor what they need, and they're able to go and find it. So that's a huge benefit for us.
Yeah. I saw one out of every 5 listings had a price cut. Some type of price cut. They went on the market. One out of every 5 listings ended up needing to kind of like reduce their price because they needed to entice people. There's 20% of active, I'm looking at it right now, 20% of active listings had a price reduction. It's insane. We're
Yeah.
down, Dallas, Fort Worth, we're down like 10% year over year in home sales. I don't know if you saw that.
No, I
So
haven't
what
seen
does that mean? So,
that.
so the average person, right? So you tell somebody a stat, you tell a buyer, hey, look, Dallas Fort Worth, we're down 10% in sales, home sales from last year to this year. Like how like what are the mental gymnastics that you think that they go through to understand that? You think they generally understand that that's a benefit to them or not?
No, I mean, I don't think that registers with a lot of your average buyer. No, I don't think that
Yeah.
they understand that at all. I mean, is that something Is that something that you have in your talk tracks when you're talking to people?
No, not necessarily. I mean, we get it all. I get it. I get it pretty frequently. Like, as I'm doing the consultations, is now a good time to buy as opposed to waiting and things like that. And then yeah, there's a lot of cost of waiting, and if the home prices appreciates at 2% and interest rates do drop, yeah, there's money to be saved on a monthly basis, but then you miss out on equity, right? There's all these different ways to look at it. But I was just kind of curious your opinion on it, like how you would think about that. If somebody told you, if you were like, "Hey Palmer, is now a good time to buy or should I wait?" And I was like, "You know what? I think it's a good time to buy because home sales in our area are down 10%." Well, like what do
Yeah.
you feel that would be a good thing to say to somebody or not?
Yeah, no, I mean it's obviously a good talk track to have to explain that to them that hey, right now the costs of homes are down. It's
Right.
only going to go back up.
Yeah.
Historically, we only go up, right?
Mhm.
And we're in a great market for it here in Texas, and especially in DFW, where home prices historically will rise. I had a house in, gosh, I think it was 2000 and it was before the bubble and everything, but it was like 2017. I bought a house for 125,000, and
Yeah.
I sold it to a friend, and she bought it from me for like I think 170. And at the time, I made a good profit. I wasn't sad about that at all. But she sold
Yeah.
it for 275 2 years after that, you
Hmm.
know? So and house values have not come down from that since. That house still sits valued at about 265, 270 to this day.
Are they going
And
up?
won't go up much more. It's a pretty small
Mm.
beginner home. But the point is that a house, around that $300,000 range, that's pretty much where houses sit nowadays, right? Like if you
Hmm.
find something less than that, then you're probably looking in a more rural community where how houses haven't really been built up yet, and there's options, or there's not as much of a demand. But in the city, you're not going to find many houses under that $300,000 mark. That's
Hmm.
pretty much the average.
Here's how I would look at it though, right? So kind of circling back to it. And that's crazy. What was the square footage on that house? I remember that house.
My house was like, honestly, I think it was 1,100 square foot.
Yeah.
It's
You had
tiny.
a big backyard though, too. I remember that.
Yeah, the backyard was nice.
Yeah. 1,100 square feet. You bought it for 125, sold it for 170. Then that person sold it for 270.
Hmm.
Yeah. Yeah. It's a
I
lot
mean,
of
it was a great investment for her. It was a good
yeah, in
investment
two
for
years
me.
she made 100 grand.
Yeah,
Like
it was a
she
great.
made she in per year she made somebody's salary. Like,
Mhm.
what is that? What Alex, what's the average annual salary these days? Like
Like 70,000
55 or 56,000 or something like that?
on average annual salary.
Yeah. I think it's like close to 50 or 60,000.
I thought it was like 60, 70. It's 64, 64, 66,000.
Yeah, so she made over 1 year's
Three,
one
yeah,
person's
three
salary
three
in 2 years.
times.
Yeah, 3 times, man.
I think
That's
that's what we did
insane.
for ours too. I think we sold ours for like 90,000.
Not you
I
guys
mean,
did it
we made
90.
90, I
Yeah.
think,
In
something
just a
like
few
that.
years. Yeah.
Yeah.
So here's how I would look at it though. Like if somebody were telling me, yeah, I mean this is if somebody told me and I was a consumer, um, Dallas home sales fell 10% year over year. I might get kind of scared of that because that mean like I would hear, okay, so is that the value? That's where my head would go with it is like the sales had dropped from last year to this year by 10%. So if we sold 100 homes last year to date, we've only sold 90, like we've lost 10%. But I think like the reframe on it would be this is that drop in home sales doesn't necessarily mean that it's a drop in values, although there
Right.
is I believe we're on average, where we're at, like 1.4%. Like that's just right around 2%, which is kind of normal. Um, but it needs to be reframed when you read some of that stuff, because where that tells me, like where my brain is looking at it, is that's not a valuation issue or problem. That's an opportunity, is where I would look at that, right? If home sales are dropping, there's less people that are buying. And if there's less people that are buying, if I'm a buyer, I have more room for negotiations.
Mhm.
Where do I have more room for negotiations? Lowering purchase price, asking for the seller to pay for things. Negotiate. I love this one, is getting the seller to subsidize the rate, right? A lot of people don't understand that. They go, oh, it's 6.5%. I'm going to wait until 5.99. Well, great. That's fine. Maybe $120, $130 of a payment difference. Okay. I'm not going to take that away from you. But what if you were to get the seller to pay for that?
Right. Oh,
You
yeah,
now have that
especially.
interest rate that you're waiting for, where otherwise you may not. And then if rates continue to drop even further, and I think that's where people really got it messed up with, like the date the rate, marry the house thing, is they really all banded to it, and and just didn't fully explain it. It was, in part, with all the NAR lawsuits and stuff like that. People just weren't explaining stuff properly. If you explain it,
Oh, I think that's the biggest probably issue, in our industry, right? Is that people don't get things explained to them properly. And even
Mhm.
I've told the story before on this podcast, but even before, my first or last time I purchased a home was before I became a loan officer, and it wasn't a great experience. And the reason was because at that time I was working in the auto industry. I knew how to handle documentations, right? So everything was being asked of me. I was getting it right back same day, as quick as possible to get approved. And I didn't understand why things were taking so long. And I became frustrated very quickly because I was like, what's the problem? Am I approved or not approved? Right. And
Yeah.
so the whole process was not really being explained to me. And I was frustrated, and I was almost ready to just walk away and just go, you know what, screw it. I'll just keep renting. It's easier. It's less of a headache, right? Than
Mhm.
than all of this. And so I feel like that's the number one thing that we kind of have to do is let people know, like, hey, we're here to hold your hand. We're here to answer your questions, and we want to make this easy for you. And giving people the why, what I've realized just being in sales is giving people the why helps kind of calm their nerves a lot when they
Mhm.
can understand something. Do you feel kind of the same way?
Yeah. Well, I mean, like, but here's the thing, that like a lot of people, it's really hard for them to grasp this concept, right? Until they're in it, right? So we got a time machine. Alex builds a time machine, a DJ time machine. It's got like disco balls in it. And we're like jamming
Your
out
volume,
everything, right?
your volume is
What are we jamming to? What are we jamming to?
your volume sounds the microphone. I think your microphone. Did you do something with your microphone?
No. Can you
All right,
hear
there
me?
you're back. You're back. So
Yeah.
say again. So say again. If Alex had a DJ time
Yeah,
machine,
so
what?
Alex has made a time machine, and he's going to be the DJ of our time machine. And we're going to go back to 2016, and we're going to find Shawn. But I was asking Alex, what music were you listening to? Do you have like, what are you DJing?
2016.
Yeah,
Going back.
yeah,
10 years ago.
I
yeah.
don't know. It was probably like
He
doing
was
some
he
kind of
was
like
finding himself.
house music stuff.
Like
Um,
Felix the House Cat.
I was probably like on maybe like a Tiesto vibes or something. Cascade.
Okay, all right. So we're jamming the Cascade. We're in Alex's time machine. It's his black Mercedes. And then
What's the
we
idea?
show
It's
it
got to
to
be
Sean,
a.
and we go, Sean. Sean's like, hey, I think I'm gonna buy a house with my wife. And we're like, okay. And Sean's like, is now a good time to buy? I hear, it's kind of hard, and is it really worth it? And it sounds like renting might be easier. And we kind of go through all this stuff. Sean, you're in a place where you have not actually realized the, what'd you say, $50,000 worth of equity that you gained when you bought the property and sold it, roughly. I think it was like 45,000 minus fees and stuff
Yeah,
like
something
that,
like that.
right? So your head is in this place of like, does it make sense? And then fast forward, when did you sell the property? 2020?
I think I sold it in hold on, I gotta think. I actually bought it before Genevieve, so I bought it 2015 and I sold it in 2018, roughly.
18?
Yeah.
So then, yeah, then you go, future you talks to old you, and you're like, dude, if you don't buy this house, this is stupid. You're dumb because I just made 40 some odd $1,000 in a span of a couple years, right? So to answer your question, it's like it's really hard for somebody to realize those potential financial gains if they have not actually lived through it. It's easy for us to talk to them about it, but we got to remember like there's a lot of people that are in a spot of not having ever realized what that is. One of our properties, I'm sitting on close to $200,000 worth of equity in it. Like, and I go, all right, well, if everything goes upside down and the mortgage industry goes under and, all this other stuff, like, should I panic? Yeah, kind of. Yeah, I got to figure out what I'm going to do. But like, also, I potentially have a $200,000 worth of equity in this one house at my disposal, where like that would probably float me for a little bit. I could do a home equity line of credit or just sell it outright. Um, but people get really hung up on the monthly payment expense and they don't really fully digest the whole train, of where it could lead 3 to 5 years.
Yeah. I think people do have a hard time seeing the bigger picture of where their money could go,
Like
just
look
by
look at this.
investing in a
This is
home.
this is crazy. I just pulled this up. So DFW home sales, I said, dropped roughly 10%. We have more than 34,000 homes on the market. We're sitting around 4.5 months, 4.4 months of inventory. Um, the typical seller is making a price reduction of about 12,500. So the average seller, 34,000 homes is what we have. The average seller, the typical seller in Dallas Fort Worth, right? This isn't like national. This is local, our backyard. 12,500 on a $400,000 loan. 12,000 would take them from the mid to low sixes to like very like a 5.996% on average, saving them, a couple $100. So if the average is, like cutting that and you're waiting for rates in the fives, you can make the rate in the five happen.
Yeah, no, absolutely. And I think that's the kind of your point is right. Like if the seller is willing to buy it down and people are waiting for that rate in the five and they really believe we're on the cusp of that, well then yeah, have the seller pay to buy down the rate, be comfortable now, and when rates do drop into that 5% range, we'll refinance you and we'll get you
Yeah.
that permanent 5% interest rate or even lower if they get there.
Would you say that buyers got the upper hand with sales being down by 10%?
Yeah, absolutely. I mean, because
Yeah.
they have the negotiating power right now. And the biggest factor in any negotiation is your feet because you can walk away. And
Mhm.
people right now can walk away, whereas, in a seller's market, they don't always feel like they have that opportunity. I mean, I remember when my parents bought their house a few years ago, it was kind of at the height of the market, and like their offer was among 50 offers, right? And even when they sold their house, they had like 50 offers come in on their home.
Mhm.
So you don't have the luxury of walking away when there's 50 offers and you feel very pressured to make a decision. And that's not a good place to be in as a buyer because you're trying to just get into a home, but then you have to make a snap decision. Is this the perfect home for me? and now you're competing against 20 to 40 other people, so you're just throwing as much as you can against it, hoping that you get the bid.
Yeah. Dude, look at this other one that I pulled up. So this is showing, I don't know how valid this is. I'm using just a quick search. Taylor Morrison is advertising 3.99 for year one and 4.99 for the second. So they're doing like a one-to-one buy down. American Legend Homes is offering up to $20,000 in closing costs. Builders are using sales incentives, and 30% of the builders in the area are cutting prices with an average price reduction of 6%. So if I'm looking at, I mean, if I'm looking at buying a home, I mean, I would probably say new construction is probably where a lot of like the really good deals are, you know? Again, these builders are sitting in places where they've got to sell these homes. They're trying to build these things. They've got money. They're leveraged on warehouse lines. They've got, their own capital, private equity capital, depending on how big they are. I mean, they're trying to sell these things, man. So would you say with those numbers, would you say that the builders are giving away too much right now?
Uh, I mean, I don't know what their margins are to say that they're giving away too much, but they're obviously desperate to get these homes sold. And, you know, for the people that can afford and get those homes, they absolutely should. Like I had a buddy of mine that came to me back last year and asked if I could get him pre-qualified. He's a great candidate to buy. He makes good money and has good assets, and so I got him pre-qualified, no problem. But then he came back and said, "Hey, there's a builder in my area that's offering, these buy downs that you just can't compete with." And I told him, I said,
Mhm.
"Yeah, I can't compete with that. So you should absolutely do that. That's going to be what's best for you." And of course, he's a buddy, so I want him to do what's best for himself. Um, so yeah, I mean, I would say it's hard for us as lenders to compete with these buyers and what they're offering. But not everybody's going to be in that bucket in that category to be able to buy a brand new house either. Nor
Yeah.
does everyone want a new build.
Yeah. Well, yeah, that's true, man. Yeah, I don't know. It is kind of interesting to
I
me.
mean, why would you not want a new build? Like, I know it's kind of preferential, but I mean, could you think of a reason? I
I,
mean,
you
your
know,
house is pretty new.
like the only reason I've gotten from people is like, um, they're not, and this is their opinion. This is not
Hmm.
my opinion. I own a new construction home,
Yeah, yours is brand new.
um, but some people have said when comparing what is being built now to what is in a larger scale, right? Like obviously, custom home builders build to custom, but their comparison is larger builders. What they're building now is not the same feel, look, and character of what was built 15, 20, 30 years ago. And through preference, they gravitate towards kind of like some of the styles that were 30 years ago or so. That's the only thing I've really ever gotten from anybody is that it's just really the characteristic. Like how does the home feel? Like how is the
Yeah.
layout?
I mean,
Um
I would
yeah.
think like I know your last home, for instance, that was kind of more of a cookie cutter home, right?
Hmm.
Um, and that one, I could see people wanting to stay away from the cookie cutter type homes that there's five different homes just like it on the neighborhood block, and they're just a different color brick, and
Dude,
you
the
know,
neighbor across the street was just inverted.
right.
It was the same house. It was just inverted.
Yeah, exactly. And so for
Yeah.
that reason, I could see why people wouldn't want those. But I feel like builders have kind of gotten smart, and now they're kind of getting back away from those cookie cutter types to where
Yeah.
even if there are similar style houses on the block, there's enough distinguishing characteristics that they don't look like it's the same house. May very
Yeah.
well be, but it doesn't look like it.
Yeah.
So, and I mean,
Yeah.
I say that because even like in my ex-girlfriend's last her old neighborhood, her house and the house right next to it were the exact same, just flipped, but they looked different, like completely different styles. So you wouldn't even look at them and think that they were the same house by looking at them.
Yeah. Yeah, I think if I were in the market right now, I would still lean towards I would still lean towards new construction. I don't know, preference. I like it.
It depends. I mean, I agree with you for the most part. But I have enjoyed like I've flipped two houses myself, and when I say flipped them, I'm like I did the work, right? Like I did the upgrades and painted and created and had the ability to kind of make it my own. And so one more than the other, but it was fun to have projects. It was fun for me, to kind of like um, feel good about the way my home was coming together. So I enjoy that kind of stuff. But I understand that like not everybody is into that. And if you just want
Hmm.
something that's move in ready day one and you just get to enjoy it and watch football, then like I can understand that too.
Yeah. What about you, Alex?
Well, I have I mean, I don't know. I was gonna talk about some crazy rate facts that I pulled up
Go for it.
online.
Yeah, drop them on us, man.
All right. So this is like the history rates. The
Oh,
lowest
dang. All right.
30-year rate ever was 2.65 in January 2021. Is that
Okay.
right? So
So
okay.
yeah, I
Highest
believe that.
30 rate ever was 18.63 in October 1981.
That's
Yeah.
crazy.
Yeah.
Yeah, I mean, I've heard that stat before, but that's insane. And the
Yeah.
only thing I could say to like even defend that is, we think like, wow, 18%, that's a lot. But look, what was the average house?
Right.
What
The
did the
price
average
of the
house
houses weren't as
home
much.
cost? Yeah, in
Mhm.
1981.
Yeah.
Is that
And
on
this
there?
one, so for a little context, this is an 881, a 300,000 mortgage would have principal and interest payment of 4,600 a month for a $300,000 mortgage.
Yeah, they were
What?
rich back
Mm.
then.
Yeah, but that's I mean that's if the house was that much. But I mean I'm
Yeah.
sure there was what the
But the
California.
average
I think
home price back then was like
let,
68,000,
let me
seventy
pull it.
thousand.
Uh,
What'd you say?
Well, like, but you also have to, the big argument though is like wage growth too. You know, wages were a lot different back then.
yeah, yeah. The average home price was 66,000.
Yeah. That's one thing, like, there's a lot of real estate agents that have been in the industry for a long time that I've talked to, and their talking track is, well, interest rates in the 80s when I bought my first home was 18%, Okay, I get it. Yes. But, you know, $64,000 a year now, right? That's what you said. Um, Wage growth 40 years ago, like you were still making you were making more money,
Yeah.
back
Well,
then. I think
I
that, like,
mean, what was the
relatively,
price of eggs back in 1981, right? What was the price of
right?
of those kinds of things? But insurance was less back then too, right? Insurance costs were a lot less. Your
Yeah.
your your costs for your taxes were a lot less.
Okay,
So
check this out though. Sorry. I was
no, go
still,
ahead.
I was still trying to give you some facts. So in California, in 81, the median house um, price was 107,000.
Okay. 100.
And they were
And what is it
That's
raising,
now?
not
What is it
surprising.
now?
it's
They're always a
like,
little bit higher.
Like
let me see,
1.3 million?
right now, let's see.
I think it's closer to like 8 or 900,000.
That
I think so. I think it's 800,000, but let me see. Yeah, about 900,000.
Yeah. It's insane. That
That's
was in the 80s. It was
crazy.
100.
That's freaking crazy.
Yeah. Eight times, man.
Dude, that's crazy.
Yeah.
I mean,
Yeah.
it's crazy to think about, but look, but so listen to this. I mean, so if the average house back in 81 was right at $68,000, and they had a 16.6% interest rate. They would have ended up paying about 350,000 for that home over the life of the loan if they kept it for 30 years. But if they kept that home for 30 years, then by the time you get to 2011, that house is valued at about $300,000, right?
Mm-hmm.
That's pretty good when you really think of it.
That's really
Because
good.
yeah, I mean that's phenomenally good because that means they're going to more than make up what they paid for that house if they sold it.
Yeah.
Maybe a lot better if they were in California. Because it would have been that value of the house would have went from
Right, yeah,
100,000 to
some of those houses
900,000.
are like $1 million houses. But you know,
Yeah.
some of that's land value too. Like I had a funny story one time, but when I was doing the refinancing, I had a couple of instances I could think of. One was there was a trailer on the side of a mountain, and it was worth like $1.3 million. But this guy was trying to refinance it. We couldn't refinance it because it was actually three trailers in one, and they were basically like pieced together like a jigsaw puzzle. So this guy was living in this massive jigsaw trailer contraption thing, but it was worth $1.3 million because of the land he sat on and the fact that he had this amazing mountain view. And then another time, there was a guy up in Portland that was trying to refinance his property. It was valued at like $750,000, but it was basically a 700 square foot just kind of a shack. I mean, it really didn't even have a kitchen or anything, so I couldn't get that one done either because it wasn't real property. It was like a shed, but it
Yeah.
was valued at 750,000, which is insane. But really, it's just the value of the land.
Yeah, I had this agent one time tell me that it was like the backside of this property like overlooked like a large pasture. It was here in Texas, and the appraisal came in like 30 grand short or whatever. And she was like, "Well, we need to fight it because there's a view. Like there's value in the view of where the property is." And I was like, well, "What do you mean?" And she's like, "Well, it overlooks just this kind of like field, and there's like cows in the field." And I was like, "That's not a value. Like that doesn't that to me personally, like that doesn't add $30,000 worth of value. But land like what you were talking about definitely does. Like that's a value in that, because there's not a lot of people that have that view in that land. So
Yeah.
Right. No, for sure.
well, I think we've had a pretty good episode so far. I think where we would probably want to leave it is just that if anybody does have any questions or concerns that is watching this, that is stuck into watching the episode with us, just give us a shout. Drop the email Holland team at meridian.loans. You can give us a call. What's our team line number again? I'm really bad about
Two
this.
two one four
817.
six one
Yeah.
seven 2726.
Yeah, there you go. You can text or call that number. Somebody obviously probably won't be me because I don't remember it, so I don't know where the phone is. We'll
I'll
answer
be
it.
answering.
Hey,
Yeah,
hey,
Alex will answer it.
I'll answer that
And
one.
if you've
before
got
we
questions, we love a dialogue. If you're listening to this and you want to join the podcast and you want to be a guest on the podcast, let us know. If you have stumbled across this page and you've listened to this entire not page, but video and you've listened to the entire thing, what do the kids say? Like, subscribe, smash that like button, subscribe.
Yeah, hit the follow, hit the follow.
Hit the follow us. You can find us on Instagram and Facebook. I'm sure you can Google. We're all public, so we don't try to hide anything. But yeah. Do you guys have any last words before we end the
Well, I was
podcast?
gonna add one thing. So I did look
Yeah.
it up. Like, basically a waterfront view, which I mean this makes sense. A waterfront ocean or lake view can add 25 to 80% value. A hilltop view can add 10 to 50%. nature or like a golf course could add 5 to 15% to the value, and then like a standard park or open space could add 1 to 5%. So, you may not pay for it, but other people are definitely looking for those scenic views, and
Yeah.
so it does make a
Yeah.
difference.
It's tomato, tomato, potato, potato, right?
So you wouldn't care if you were looking at the back of, some burger joint.
No, not at all. I
Wouldn't bother
mean,
you at all.
no, I
It
don't
would
think it
bother
would.
me. I don't want to look. I want a scenic view.
Really?
Yeah,
No,
yeah.
I don't get hung up on that stuff, man.
I
But on the flip side of it, I would definitely consider like how is this going to appreciate? How is this going to increase my value? If I don't
Yeah.
feel like it's going to increase my value, then yeah, I'll probably pass on it. But as far as just the aesthetics and the view of like what's around my house, me personally, I don't know. Marissa differently. Yeah, Marissa would probably have an issue with that. So, and
would
she is
then.
the deciding factor with
I was
everything.
about to say she probably gets the final say in it, anyways.
Yeah, I don't decide much. I get to choose like what I'm gonna wear
She
and
lets you do that.
yeah, sometimes eat, but that's about it.
Are you
That's
still
about
are you
it.
still wearing flip-flops?
I am actually barefoot right now, but you know, I'll probably be barefoot at the office or wearing flip-flops or something. So
2 weeks, 2 weeks. So that's when we'll have and let's start our episodes there in 2 weeks. But we're gonna have one more here, one more like this, and then in 2 weeks it'll
yeah,
be a little more professional.
There
heck
we
yeah,
go.
I love it.
All
All
right.
right,
Uh,
well, everybody that tuned in, have a good day.
this
Appreciate
is
it. Deuces, guys.